Imagine a single computer unlocking uh, basically every secure bank
Yeah,
vault on Earth.
right, in an instant.
Exactly. Or like reading every encrypted military text and shutting down the entire global GPS network in a single afternoon.
It is a terrifying thought.
It really is.
Yeah.
That is the $10 trillion threat of quantum computing if it falls into the wrong hands. Welcome to the Byte-Size Brief. Today we are putting IonQ, that's IonQ, completely under the microscope. Let's get into it.
I am very excited for this one.
Same here. You know, we are looking at a company today that feels like it just stepped right out of a science fiction novel, but it is generating massive real-world cash right now.
Real cash, yes, and at an incredible growth rate.
Yeah. We are talking about the leading pure-play quantum computing company, and they have just hit this staggering commercial inflection point. I mean, we are seeing triple-digit revenue growth here.
Which is almost unheard of in this specific hardware sector.
Exactly. But here is the central paradox for you today. The retail investor community and the financial analysts, well, they are violently divided on this stock.
Oh, absolutely divided.
Right. Like half the room thinks IonQ is the next multi-trillion-dollar tech giant, and the other half thinks it is just a wildly overvalued gamble.
It is the ultimate market tug-of-war, really.
Yeah.
And to understand it, we have to separate the actual technological reality from the market hype.
Yeah, that makes sense.
Because you look at their growth, and it is undeniably impressive. They are crossing revenue thresholds that nobody in the quantum space has ever really touched.
Uh-huh.
But then you look under the hood at their extreme valuations, their $500 million cash burn, and some highly concerning insider behavior, and, well, the temperature in the room drops very quickly.
Which is exactly why we need to establish what IonQ is actually selling right now before we dissect their crazy financials.
Right. Let's start with the tech.
Because earlier this year, there was this massive market shock. NVIDIA's Jensen Huang came out and boldly claimed that useful quantum computing is like 15 to 30 years away.
And the market reacted violently to that.
Violently is the word. IonQ stock dropped 46% in a single week.
Yeah, that drop is a classic example of how fragile investor sentiment is in emerging tech. Jensen Huang is the undisputed king of AI hardware right now.
So when he speaks, people listen.
Exactly. The market listens. But he was talking about broad, ubiquitous commercial advantage. The point where a quantum computer is sitting on every desk.
Right, like a smartphone.
Right. And IonQ pushed back hard on that narrative because they already have functioning systems today. It is not some theoretical blueprint sitting in an academic basement somewhere.
No, you can actually use it right now.
Exactly. Their latest system, the Forte, features 36 algorithmic qubits, and it is available right now on major cloud platforms like AWS, Microsoft Azure, and Google Cloud.
Let's pause right there, because for anyone who isn't a quantum physicist, we need to clarify what an algorithmic qubit actually is.
Yeah, that's a crucial distinction.
Because in a regular computer, a bit is either a 1 or a 0. But a qubit can be both at the same time, allowing it to process massive amounts of data simultaneously.
That is the core of it, yes. But quantum states are incredibly fragile.
How fragile are we talking?
Extremely. A tiny change in temperature or even mild ultramagnetic radiation can cause an error. That is why we distinguish between physical qubits.
Which are the raw hardware components?
Right, the raw physical hardware. We distinguish those from algorithmic qubits, which are the actual error-corrected, useful, logical qubits that can run a program without crashing.
Ah, okay.
So hitting 36 algorithmic qubits is a massive technical milestone. And they are doing it using trapped ion technology.
And from what I understand, that trapped ion approach is basically their secret weapon.
It absolutely is.
Yeah, because a recent Kearney study validated that IonQ's bill of materials for a fault-tolerant system is roughly 30 times cheaper than the superconducting systems being built by competitors like IBM or Google.
30 times cheaper is a massive competitive moat.
But why is it so much cheaper? Like, how does it actually work?
Well, it comes down to basic physics and engineering. Superconducting systems, like the ones IBM builds, require massive, highly complex cryogenic cooling systems.
Because they get too hot.
Not exactly. They have to keep their processors at near absolute zero.
Wait, really?
Yeah, literally colder than deep space.
What?
Because any thermal heat creates noise that destroys the fragile quantum state we just talked about.
Wow.
And those cooling chandeliers are incredibly expensive to build and to operate.
I can imagine. So what does IonQ do differently?
IonQ's trapped ion technology takes a completely different path. They literally use lasers and electromagnetic fields to suspend individual atoms.
Like floating in midair.
Basically. They use atoms like ytterbium or barium and suspend them in a vacuum chamber. Because the atoms are perfectly isolated in that vacuum, the system can operate near room temperature.
Oh, wow. Room temperature. That's huge.
Exactly. It is a far more elegant, significantly cheaper physical architecture.
Which makes total sense. I mean, if you don't have to build a deep space freezer for every single computer, your costs are obviously going to plummet.
Precisely.
But the real story here is what they are doing with that architecture. They just announced a planned $1.8 billion acquisition of SkyWater technology.
This is a monumental pivot for the company.
Yeah.
Definitely. SkyWater is a U.S.-based semiconductor foundry. By acquiring them, IonQ is shifting from being just a pure research lab into a vertically integrated, full-stack manufacturer.
Meaning they control everything.
Yes, they want to control the entire fabrication process from start to finish.
So basically, it's kind of like IonQ isn't just designing the ultimate race car. They're buying the steel mill and the engine factory so no one can throttle their supply chain.
That is the exact goal, yes. This acquisition is designed to accelerate their hardware roadmap to hit a 256 qubit system by late 2026.
That's coming up fast.
It is. And eventually, they want to scale to a massive 2 million physical qubit chip by 2030.
2 million?
Yes. If they hit 2 million physical qubits, we are talking about the ability to perfectly simulate complex chemical reactions for new pharmaceutical drugs or optimize global supply chains in literally seconds.
That sounds like magic.
It does. However, buying a massive foundry adds incredible integration risk.
Oh, because it's a completely different business model.
Exactly. You are taking brilliant quantum physicists whose entire culture is built around tweaking singular machines in a pristine lab and asking them to successfully integrate and run a complex, heavy manufacturing business.
With like quotas and supply chains.
Right, with 24/7 yield requirements, it is a completely different operational DNA.
Okay, so compared to last quarter, what actually moved the needle here? Because buying a massive semiconductor foundry takes serious cash.
It certainly does.
How is IonQ actually paying for all of this, and what do their real-time financials look like?
The improvements on the top line are genuinely historic. The fourth quarter of 2025 was an absolute blowout. They had a $61.9 million in revenue.
Which is just...
That is a 429% year-over-year jump.
429%. That is the kind of explosive growth that makes retail investors just lose their minds.
And justly so. It's a massive acceleration.
And they aren't slowing down either. For the first quarter of 2026, estimates are sitting around $49.73 million, which is up 557% year over year.
Right.
They even issued a massive full-year 2026 guidance of $225 to $245 million. Oh, and let's not forget the fortress.
Yes, the cash position.
They are sitting on a $3.3 billion pile of cash with zero debt. I mean, that gives them over 11 years of runway at their current burn rate.
That cash fortress is undoubtedly their greatest asset right now, especially as they scale manufacturing. But we have to provide a severe reality check on those earnings.
Uh-oh. Here comes the cold water.
I have to do it. Specifically, we need to talk about the GAAP profit illusion that is currently being widely debated on Reddit and retail forums right now.
Oh, I've seen those threads.
Right. So IonQ reported a jaw-dropping $753.7 million net income for the quarter.
Wait. How is it even legal to report a $750 million profit if no actual cash hit their bank account?
Welcome to the bizarre world of generally accepted accounting principles, or GAAP.
It's just wild.
That massive profit was almost entirely driven by a $949.6 million paper adjustment for warrant liabilities, alongside some paper tax benefits.
Okay, explain the mechanics of that. What exactly is a warrant liability adjustment?
Well, when a company issues warrants, they're giving investors the right to buy stock at a specific price in the future.
Okay, I'm with you.
On the company's balance sheet, those outstanding warrants are recorded as a liability. Basically, it's a debt.
Right.
As the company's stock price fluctuates on the open market, the estimated cost of that liability changes. Under accounting rules, if that liability decreases on paper...
Because the stock price moved.
Exactly. If it decreases on paper, the company gets to record that decrease as a financial gain in their net income.
But they didn't actually make any money.
No. No actual cash entered the building.
Yeah.
It is purely accounting magic.
Let me make sure I've got this. It's like telling everyone you made $1 million this year. But it's only because the appraised value of the debt on your house magically went down on paper.
That's right.
You don't actually have $1 million to go spend at the grocery store.
That is a perfect analogy. And when you strip away that paper benefit, the actual operating loss for IonQ was over $510 million.
Ouch.
They burned $500 million in cash to achieve that record revenue.
You know, if they have a fortress of cash and record revenue, you'd think the market would be universally cheering. But when you look at the price tag the market has put on that revenue, the math just stops making sense.
It's every stretched, yes.
Let's talk about how the market is pricing this explosive revenue against those massive operating losses, because the valuation is giving people whiplash.
The valuation is frankly extreme. IonQ is currently trading at a 93 times trailing price-to-sales ratio.
93 times.
Yes. And to give you some context on how astronomical that is, Snowflake, which is considered a premium high-growth cloud stock, trades around 13 to 14 times sales.
And people call Snowflake expensive.
Right. Even NVIDIA, the absolute poster child for the global AI hardware boom, is trading around 30 times sales.
If you bought a local coffee shop for 93 times the money it brings in a year, you wouldn't see a single dime of actual return on your investment for almost a century.
Unless they somehow started selling 1,000 times more coffee overnight.
Exactly, unless growth exploded to an unimaginable degree. That's the math happening here. A 93 times multiple means the market is pricing in absolute perfection for the next decade.
And that required perfection gets even harder to achieve when you look at how they are paying their people.
The stock compensation.
Yes. Stock-based compensation, or SBC, is sitting at $312 million. That represents 240% of their revenue.
Wow.
Let that sink in. They are paying their employees 2.4 times more in stock than the company's actually earning from its customers.
I mean, I see companies in the broader tech sector throwing around heavy stock compensation all the time, especially in AI and cloud software, just to retain top talent.
It is common in tech, yes, but at 240% of revenue, it becomes a structural problem. It creates massive compounding dilution for the shareholders.
Right, but what does all that actually mean for IonQ investors? Hold on, how does that actually affect IonQ's stock price for regular investors like me when the CEO is dumping shares?
Well, that's exactly it, because the insider selling data here is alarming.
It really is.
It is the ultimate red flag for any financial analyst. We're looking at $335 million in coordinated insider selling.
That is a staggering amount of money.
The founder, Peter Chapman, sold $230 million worth of stock, and the CEO, Niccolo de Masi, sold his entire indirect position for $105 million.
And I know the company will point out that these were executed via 10b5-1 trading plans.
Right, that is always the defense.
What is a 10b5-1 plan and why does it matter here?
It is basically a legal safe harbor. It allows corporate insiders to pre-schedule stock sales months in advance to avoid accusations of insider trading. It is designed so executives can say, hey, I didn't sell because of recent bad news. My broker scheduled this a long time ago.
Makes sense on paper.
But the critical detail, the massive loophole, is that you get to choose when you adopt that schedule in the first place.
Wow.
And these two top executives adopted their trading plans within 2 days of each other.
Wow. So the founder and the CEO essentially synchronized their exits at the absolute top right before a massive $500 million cash burn was revealed to the public.
Precisely. And across the board, the overall insider sell-to-buy ratio is an astounding 117 to 1.
That's crazy.
For every single dollar an insider bought, $117 were sold.
Now, if you're holding IonQ in your portfolio right now, you're probably hearing this 117 to 1 insider sell ratio and feeling a massive pit in your stomach.
And you aren't the only one. It's really no wonder that short interest has doubled to 24.04%.
Yeah, the shorts are piling in.
When the people who know the technology, the integration risks with SkyWater, and the true timeline best are liquidating at that scale, the market notices.
Okay, let's unpack this fully. We have an astronomical 93 times multiple. We have $500 million in operating losses. We have 240% stock dilution, and the top executives are cashing out hundreds of millions of dollars.
It looks bleak on paper.
Logically, the stock should be cratering, but it's not. The stock is surging. Analysts actually have price targets implying over 32% upside. Why?
Because this isn't just commercial tech anymore. We have crossed into the realm of national security.
A military angle.
Yes.
Yeah.
You are not buying a software-as-a-service company. You are buying into the space race of our era.
Yeah. CEO Niccolo de Masi was just at Davos and made headlines at a semaphore event discussing exactly this.
He was very vocal.
She framed quantum computing as an existential threat if China gets the technology first. He was incredibly blunt about it. He warned that if an adversary uses a quantum computer to crack RSA 2048 encryption, it wouldn't just be a localized hack.
No, it would be devastating.
He said it would be a $10 trillion economic hit.
And to understand why, you really have to look at how encryption works today. Classical computers break encryption by trying every possible combination sequentially.
One by one.
Exactly. Which would take billions of years for RSA 2048. It's basically the digital padlock protecting the entire global banking and communication system. But a mature quantum computer uses something called Shor's algorithm to test possibilities simultaneously, finding the prime factors almost instantly. It would effectively reset the global economy.
And that terrifying reality is driving a massive strategic pivot for IonQ toward defense and infrastructure. Look at what they've done in just the last few weeks.
It's been a busy month.
On April 27th, they launched a 100-mile quantum-safe network with Florida Lambda Rail.
Yes, they are using quantum key distribution, or QKD, to secure data across the state.
And QKD is special because...
Because it is physically unhackable. The very act of a hacker trying to observe the quantum state alters it, which immediately alerts the network to the breach.
So you can't even spy on it without breaking it.
Exactly. Then, on May 4th, they launched a commercial InSAR capability.
Wait, define InSAR for us.
Interferometric synthetic aperture radar.
That's a mouthful.
It is. It basically allows them to use satellites beaming radar to track millimeter scale changes on the Earth's surface.
Millimeter scale from space.
Yes. They can detect subtle troop movements, infrastructure changes, or hidden assets anywhere on the planet down to the millimeter. This is an absolute game changer for military intelligence.
That is insane. And then you add in their acquisition of Vector Atomic.
Which is another massive defense play.
Right. Vector Atomic gives them precision atomic clocks. And from what I read, this could provide an actual alternative to GPS.
That is the goal.
Because in modern warfare, GPS jamming is a huge vulnerability. We see it happening in conflicts right now. If IonQ can shield against that jamming using quantum timing, I mean, I'm fascinated by this.
It changes everything.
They aren't just building faster computers for pharmaceutical research. They are essentially building unhackable banking networks and next-gen military GPS.
And that is the exact reason why analysts are justifying that high price-to-sales ratio we talked about earlier. Government and defense contracts create an incredibly sticky revenue stream.
Once you're in, you're in.
Exactly. Once a military integrates your quantum timing for their missile defense networks, or a nation-state uses your quantum network for its intelligence agencies, they do not churn.
Yeah, they aren't going to cancel to save $10 a month.
Right. They don't cancel their subscription to switch to a slightly cheaper competitor. Furthermore, with a national quantum policy bill advancing in the background right now.
Oh, a federal funding.
Yes. There is a massive wave of federal funding about to hit this sector, and IonQ is actively positioning itself to catch the largest wave.
So on one side of the tug-of-war, we have unprecedented 400% plus revenue growth and a $3.3 billion cash pile. This gives them an undeniable edge in a geopolitical quantum space race to secure the world's data and navigation.
It's a very compelling bull case.
It is. And warring against that exact narrative, you have an astronomical 93 times valuation, massive shareholder dilution, and deeply alarming insider selling that makes you wonder what the executives know about the hardware timeline that we don't.
It is the absolute definition of a high-risk, high-reward frontier.
Which brings us to a final thought for you to ponder. If IonQ truly holds the key to Western national security, and if they are genuinely the only ones capable of replacing vulnerable GPS systems and preventing a $10 trillion cryptographic collapse...
Does the old math even matter?
Right. Does the traditional metric of a price-to-sales ratio even matter anymore? Or are retail investors driving themselves crazy trying to value a geopolitical weapon using standard tech multiples?
It raises an incredibly important question about how we fundamentally value paradigm-shifting technology, especially when national survival is literally part of the business model.
Exactly. All right, listeners, what's your take on the future of IonQ? Are you bullish, bearish, or sitting on the fence? Let us know in the comments. See you next time on the Byte-Size Brief.